welcome back. You're watching Market Cafe, and now some merger details trickling in for GSPL and Gujarat Gas. GSPL shareholders are set to get 10 shares of Gujarat Gas for every 13 held. The analysts have a positive view on the merger due to the simple structure and the EPS upside. Somit joins in with more details. Somit, is it the same part of the restructuring which was announced just a few days back? Tell us more details about it.
Well, a mega merger among the Gujarat-based gas companies was announced in the start of the month. Now, as per the merger agreement, GSPL is supposed to be merged with Gujarat Gas, and the share swap ratio decided for this is that GSPL shareholders will get 10 shares of Gujarat Gas for every 13 that they are currently holding in GSPL. Now, when the merger was announced, GSPL shares were valued at a premium of nearly 5%, which means that if you would have purchased 13 shares of GSPL at that time, then post completion of the merger, the value of the 10 shares that you would have got in Gujarat Gas would have been valued at a premium of nearly 5% based on the share swap ratio and Gujarat Gas share prices. However, given the recent weakness that we have seen in the PSU shares, GSPL share prices have fallen by nearly 9%, while that of Gujarat Gas have largely remained stable. Now, owing to this, the arbitrage between GSPL and Gujarat Gas has increased to nearly 17%. This means that if anyone purchases GSPL shares, 13 shares of GSPL, they will be valued at close to now 5,244 rupees, while the 10 shares of Gujarat Gas will be valued at close to 6,126 rupees. That is nearly 17% higher. However, the catch here is that one needs to hold the GSPL shares until and unless the record date for this merger is announced, and the shares of Gujarat Gas will be credited to that individual's account only post the completion of this merger. Now, what we understand is that this merger is expected to complete by nearly August 2025. Now, assuming that the share prices of both these companies remain largely stable, this will mean that one could get a return of nearly 17% by holding GSPL shares over the next 1 year. Now, analysts viewed this merger quite positive given the fact that the structure was getting simpler and there was EPS upside on the back of merger synergies. In fact, Morgan Stanley said that the merger of Gujarat Gas and GSPC and GSPL could lead to a 70% upside on the EPS front for Gujarat Gas and a 20% increase in the net asset value. However, there are two key risks when it comes to this arbitrage. Firstly, if there is a delay in the completion of the merger, and second big risk is that if there is a further fall in the share prices of GSPL and Gujarat Gas, then these gains of 17% could be far lower for any shareholder.
Alright, thanks Somit for that update coming in on GSPL and Gujarat Gas merger. Moving on.
If you like this video, then like, share and subscribe to ET Now.